Ghana Commercial Banks. Okay. Good afternoon, ladies and gentlemen. This afternoon, I'm giving a report or a summary on the second quarter analysis of Ghana Commercial Bank. Now I'll start with the corporate background, company background. So Ghana Commercial Bank Limited is Ghana's first indigenous as well as leading banking group with over 180 branches and 300 ATMs nationwide. It was established in 1953 and rated as Ghana's safest bank. GCB has undergone various transformations with the view of being the dominant player in Ghana's banking industry. The company is headquartered in Accra, Ghana. GCB Bank Limited engages in the provision of banking services. It operates through the following segments. Now, there's retail banking, there's corporate banking, there's treasury, and there's commercial banking as well. Now, I'll give you a small breakdown of what they do. The retail banking segment concentrates mainly on individual customers and therefore provides the required platform to enhance service delivery to that segment. Now, the corporate banking segment is responsible for the business banking customer profile. The treasury segment also provides the expertise and the platform for the centralized management of the group's markets risk exposures. Now, commercial banking segment provides banking services by way of financing and raising deposits, as well as providing trade services to these small scale clients. Now, let's take a quick look at the trading and valuation summary. Now, this table gives us a brief understanding of how the company has been doing in terms of trading. Now, GCB has a ticker of the Ghana Commercial Bank uses the ticker of GCB. Now, the bank opened at the year with 5 Ghana cedis 24 pesos and is currently trading at 5 Ghana cedis. This represents a 4.8% decline of its share price. Now, looking at the moving averages, that's the 200 days, the 100 days, and 50-day moving averages. We could tell that there's a reluctant but downward slope in the share price. Now, with a stock beta of 0.84, we tell that this shows that the company is less volatile and a risky venture for investors to put their money. The current market capitalization of the bank is 1.33 billion Ghana cedis. Now, it has a PE, a price to equity ratio of 2, and a 3-year average, that is from 2019 to 2021. You could see that the PE average is 2.67. Now, it has a PE, price to book value of 0.5, and in the past 3 years, their revenues have grown by an average of 18.75%. Now, in 2021, the fiscal year, we had a revenue growth of 18.96%, which is okay. With an earning per share of 2 Ghana cedis 36 pesos and a return on assets of 3.38% and a return on equity of 23.43%, GCB is actually doing quite well. Now, this is a short summary of price history and performance of the bank within the past 1 year. I could see that over here, it has a maximum of 5 Ghana cedis 39 pesos way before October, and now it currently trades at 5.00 Ghana cedis, which I've explained above. And let's take a look at the financial and health operations. Over here, we take a quick peek of the second quarter income statement performance. Now, from this, we could tell that GCB recorded a significantly strong second quarter readings in this year as compared to that of the 2021. Now, given the 46.82% growth in cash and cash equivalents and a 24.6% rise in the profits after tax and an increase in the net interest income by over 66.15 million Ghana cedis. Now, over here, this is a chart that shows the 5-year trend, 5-year revenue and profits trend of the company. Now, over here, I mean operating profit, and with the profit over here, I mean profit after tax. Now, the continuous rise in the profits year on year indicates how well the firm has managed its expenditure as well as its revenue growth. The strong revenue growth performance over here can be attributable to 1, the new customer acquisition and enhanced wallet share, 2, expansion of loan book, 3, new robust digital platforms in place to deliver superior value to customers, and 4, segmented customer base to realign products and services to meet customer needs. Kofi, please give me 1 second. Hello, Kofi. Sorry, I'm back. Can you hear me? Okay. All right. So let me go over this thing again. So over here we have the 5-year revenue and profits trend of Ghana Commercial Bank, and it's over here the figures you're seeing are recorded in thousands. So if you're seeing 2021 profits, which is the same as profits after tax of 556,667, it's in thousands. So that makes it 556 million. Okay, so we move on. So based on this, we could tell that the continuous rise in the profits year on year indicates how well the firm has managed its expenditure as well as its revenue growth. Because if revenue is growing over here, even though it still has expenditure, that it has OPEX that it incurs and it takes care of, you could see that profit is also growing respectively. That means they've done well. Now, all this can be attributed to the new customer acquisition and enhanced wallet share, expansion of their loan book, because we did see GCB actually is one of the largest in the country. And over here, new robust digital platforms in place to deliver superior value to customers, talking about their Gmoney and other digital platforms. Now, they have a segmented customer base to realign products and services to meet customer needs.
Okay, Albert, do you have to support these? Do you have to support them?
Is it?
You have to support the new customer acquisition expansion. You have to support them.
Yeah, I have. I just didn't add it to this one because I thought it would be too much of figures, a lot of them. But I would do the corrections.
So maybe you can add for the new customer acquisition. Maybe you can just say percentage. Yeah.
Okay.
And the expansion of the book, you can state percentages. All right.
Okay. Okay, noted.
All right, please move on.
Now, over here is a breakdown of the 2021 revenue composition. Now, 2021, with the revenue that GCB accrued, you could tell that 41% of the whole revenue share or quota came from retail banking, and 15% came from corporate banking. Now, 9% was from commercial banking, and the remainder of the revenue base came from treasuries and other services that they rendered. Now, let's look at the financial soundness indicator. Over here, we look at the asset quality. Now, with the asset quality, you could tell that the quality of the assets that they've gained over the years from 2019 to 2021 has been increasing by a very progressive margin. Now, if you quite remember, way above on the charts, you looked at the fact that their return on assets or had grown or currently stood at 23%. That is also indicative over here. Now, the cost to income ratio of the firm has also decreased in the past 3 years from 2019 to 2021. 2019, you could see that our cost to income ratio was 58.8%. Now, in 2021, that's the previous year, the year ended, it's 52.6%. That also indicates there's a consistent decrease in the cost to income ratio. So it means that they are actually managing their costs well as against vis-a-vis their income. Now, this chart also gives us a fair idea of the equity, the debt, and the cash to cash equivalents of the firm in the past 5 years. Now, based on these that are shown, you could tell that GCB has maintained a suitable level of debt to equity ratio over the past 5 years with an average of 40.08%. Now, looking at their asset level, GCB's asset to equity ratio is 7.1, which is low compared to the benchmark of 10. That's making it suitable for operations. GCB diversified the assets component of their balance sheet by increasing its earnings assets, which has improved the quality of the assets over the past 3 years. So this is what I was stating about, that their quality of assets has actually increased or improved over the past 3 years, and this is why. Now, on the loan level of the firm, GCB has an appreciable loan level to assets ratio, which is 24%, because it is far, far, far below the benchmark of 110%. And the benchmark is pegged at a high rate because loans are less liquid than other financial assets. That's a higher loans to assets ratio could mean higher risk. So GCB is having their loan to asset ratio at 24%. It means they are doing a tremendous work. Now let's look at some key ratios over here. And this is a 5-year summary of certain ratios. We have the liquidity ratio, the net profit margin in percentage, the return on assets, return on equity, the capital adequacy ratio, and the non-performing loans ratio as well. This is a 5-year summary. Now, the notes I've put over here tells that there's a low risk liability. Why is this? 79% of GCB's liabilities are made up of primarily low risk sources of funding. Customer deposits are the primary sources of funding, which is less risky than borrowing externally. And the level of non-performing loans over here, GCB seems to have a high level of non-performing loans. That's the previous year of 15.7%. However, due to the provisions made, you could discounting this leaves it at an active non-performing loan of 3%. And we could explain the reason later. Low risk deposits. Now, GCB's loans to deposit ratio is 35%, which is considered appropriate since it is way below the benchmark of 125%. Now, a lower ratio means the bank has enough liquidity to cover any unforeseen funding requirements. Now, let's move on to the valuation of the firm. Now, using the discounted cash flow model, specifically the excess return model, I pegged the fair value of the bank at 7.34 Ghana cedis. Given its current share price of 5 Ghana cedis, GCB is undervalued by 3.9%. Thus, the stock is considered significant since it's trading below the fair value by more than 20%. Now, the table over here gives us a 5-year summary of earnings per share, the PE, the PB, the book value per share, then the price, the PB ratio, as well as the dividend yield. And in the EPS over here serves as, let me break it down. The EPS serves as an indicator of a company's profitability, and that's the earnings per share. It grew by 135.96 over the last 5 years. Now, with an average of 1 Ghana cedi is 50 pesos. Now, the current earnings per share, EPS, is 2 Ghana cedis 36 pesos, which is actually reported as the highest, which is actually reported the highest in the company's return within the past 5 years. And the PE ratio of GCB recorded as in the second quarter is the company's lowest ratio during the last 5 years under review. Thus, investors earn more at a lower cost. The current that is 2.04 times or 2.04:1 ratio implies that the company's share price is 2.04 times its earnings per share. And the PB ratio of GCB is 0.51 or 0.51:1. This implies the stock is undervalued when compared to the book value per share. Now, the current PB ratio is the company's second lowest recorded in 5 years. The PB ratio over the last 5 years has an average decline rate of 7.73%. Now, over here, we compare GCB to its peers in terms of the PE ratios. Now, the peers over here, you're looking at Standard Chartered Bank with the ticker SCB. We have Ecobank Ghana, EGH. We have Societe Generale, that's SOG EGH, and we have Cowbank, CAL. Now, you can see GCB has a PE ratio of 2. Compared to the average or the average amongst its peers of 3.5, GCB is actually doing quite well. Now, GCB has a good value based on its price to earnings ratio. That's 2 times compared to the peer average, which I've already stated 3.5, and the banks in Ghana banks industry average of 3 times. So this makes GCB a more suitable bank in terms of the PE ratios compared to its peers. Now let's take a look at the industry and economic analysis. The Ghanaian economy has experienced a lot of shocks within the last 5 years, from the banking sector crisis down to the COVID-19 related shocks. These shocks stifle growth in the global economy, which Ghana was no exception. Below are brief highlights on these shocks and impacts on the economy and banking sector. In 2019, we had the pandemic, that's the COVID-19 pandemic, which surprisingly wasn't really something we expected, and that caused a whole lot of supply chain disruptions. And based on this, there was snail growth and retrogression in most sectors of the economy, globally, and Ghana as well. But on the blind side of things, it actually increased purchasing powers due to injections that governments made for a certain brief period of time. Now, these supply chain shocks also in turn caused cost push inflation. That in turn actually increased the prices of commodities or production of goods and services as well. And this was mainly influenced by crucial sectors like the energy sector, which with rising oil prices, among others. Now, another thing that also affected, another shock, was the Russia invasion of Ukraine. This obviously caused a rise in inflation, which we are currently experiencing, and increasing consumer price index. Now, with all this happening, most governments, including the government of Ghana as well, trying to manage all these things. The central bank came up with monetary policy rate hikes, which actually was supposed to reduce the current money supply in the system and curb the whole inflation process. But this also in turn reduced the purchasing powers of people, investors as well. And also another shock that we experienced was the downgrade of economy's rating. Ghana is currently rated as a triple C plus rating, or C, which is attributable to its highly unstable debt. Ghana currently has a debt to GDP ratio of 82%, which is very, very high. Now, all this, what this caused, or what this happened was, it caused a capital reversal, which simply means investors shying away from the economy. Because if your economy is rated at triple C plus, over here it shows that you are unstable in terms of debt, and therefore it's not attractive for investors to put in money like that in various areas. And this would definitely affect so many areas of the economy. Now, this also affected the cedi's depreciation. The cedi has depreciated tremendously after all this. And also this also caused negative net exports, and in turn caused economic withdrawals. However, Ghana Commercial Bank remains the third highest market cap company with a market cap of 1.3 billion in the banking industry and listed on the Ghana Stock Exchange. Now, below is the data that gives you a fair idea of the consumer price index, how it has grown and affected the purchasing power of investors, and also inflation figure over here within the past 1 year. Ghana's annual inflation rate accelerated for the 14th straight month to 31.7% in July 2022 from 29.8% in June, breaching the upper ceiling of the central bank's target band of 6% to 10% for 11 months. It was the highest reading since December 2003, surpassing the market's forecast of 30.8%. Prices quickened further for both food as 32.3% versus 30.7% in June, and non-food products of 31.3% versus 29.1%. On the spine of a weakening cedi, the prices of imported goods outpacing domestic ones for the fourth month under the existing net export deficits. On a monthly basis, consumer price index advanced by 3.1%, up slightly from 3% rise in the previous month. Now, after all this, here's my recommendation. Companies' growth is key concern to small, medium, and long-term investors. The above shows GCB's strength, growth, concern, and dedication towards a solid and improved company performance going forward. GCB over the past 5 years have shown resilient growth in terms of revenue generated, significant rise in customer deposits, high interest income, profits growth, assets growth, shareholders equity base, strong liquidity position, among others. The book value per share of 9.61, the required rate of return using the excess return model of 22.3%, and the beta stock of 0.84, among other parameters, implies an optimistic view of GCB share price going forward. It's expected that the stock will trade higher than the current 5 Ghana cedis since the company is undervalued, and the valuation parameters point out a positive outlook. I therefore suggest a hold for investors who have already taken their position in the company and a buy at the current price of 5 Ghana cedis for medium term and long term investors. Thank you.
Thank you, Albert.
So do I stop sharing screen or it's okay?
No, it's okay. Hey Ben, can you hear us? Hello Ben, would you like to share something? Okay, probably is not paying attention. All right, so Albert, I think I liked your presentation. The content and your technical ability is quite different. And I think the rest of us would have to take a look and maybe we'll beef up what we are doing with some of the stuff that you've, especially regarding the economy and the other factors. All right, let me start as usual. Let me start with the recommendation. Let's go down to the recommendation.
Okay.
Okay, so you say the book value per share of 9.61 and the required rate of return using the excess return model 22.3%, beta of 0.8 among other parameters implies an optimistic view of GCB share price going forward. Okay. So it's expected that the stock will trade higher than the current price of 5.
Yes.
Okay. You therefore recommend or suggest a hold for investors who have already taken their position in the stock.
Yes.
And then buy for the current price or the current price of 5 cedis. Okay. Let's look at the trading history. Yeah, we made a maybe took note of it up there somewhere.
Yeah. This one, I just realized something was missing out of it.
What's that?
The total value traded.
Value traded, okay.
Yeah.
Okay, so the volume traded year to date, are you saying 3,690?
As at the time, the data I had, I was using I was comparing it to a few Wall Street Journal. Actually got it from Wall Street. I tried GSE. I didn't really get any specific data on that. So Wall Street Journal, what I got was what I put in there.
No, I don't think it's correct though. Year to date.
Okay.
We're in August.
Then some figures are missing. In August, in August.
No, I don't think it's correct.
But I think that one I'd have to look at it again, the total volume and
the figures are on the JS website. Even the I shared something recently on the platform. Let me see.
Oh, really?
Market activity. Let me see the research. The document I put there.
Was a document.
Yeah. Oh, I didn't put it. Yeah, so looks like I didn't put it. All right, we're busy discussing a US economy. I'll look at that.
Oh, you did put a GSC market summary, but it's not specific.
There was a document I should have put.
Okay.
No, it doesn't.
Could you kindly send it?
I'll share it. It is in my inbox. I'll share it there.
Okay, sure.
Yeah, I'll share it there. So that you can get an updated figure because the volumes traded, the activity on the market will
be more.
It will be more, but that will give us more information into the recommendation.
Oh, okay.
You understand? Because activities feed into the recommendation. And the other thing you must look out for is the number of bids versus the number of supplies.
Oh, okay.
So if you want to give a very fair judgment to the recommendation, okay, so that we can be sure whether what you are saying, the 5 cedis, buying it at 5 cedis, it has a potential of going up, then we can be very sure that it will happen in that direction. Apart from that, the way the economy is now, the way interest rate is flying, the way inflation is going up, the way the city is appreciating, everything points to a money market purchase. All right, but if you're able to back your analysis with this that I have said, then we can say something else. Okay.
Okay. Okay. Eben says he's here.
Yeah, Amen. Amen. You want to make some comments?
Yeah, hello.
Yes, Amen.
All right. So I didn't come early, but I think when I got here, it was on the economic analysis side. Yes, I heard so much about the negative side. Okay, I mean, but currently, you know, there are negotiations ongoing.
Yes.
With the IMF stuff. Don't you think that is going to also, I mean, if it happens that things go well with them, don't you think it's also going to bring or have some positive impact on these variables, like these macroeconomic variables?
Actually, it would do a good. It would have a positive impact on these variables. Will have a positive impact on the price and the stock pricing of the firm as well, and so many other things. However, these the negatives that you're hearing actually, I think probably maybe I failed to mention or talk about it, was the fact that it's actually a quota to the reason why the prices are declining. So, for example, like if you are seeing all these positive and solid returns or solid financials from the company, but why was the price like depreciating for a certain period of time? Then you could tell that okay, this is the reason. However, early on, I also talked about looking at the moving averages, and I was explaining over here that the moving averages indicate a reluctance. Now, there's a reluctancy because yes, the firm is performing all right, even though the market is not doing so well. The general economy is not doing so well. So over here was to indicate the reason or to buttress the reason. Okay, yeah, it's actually falling based on all these things. I think what I should add to it is your recommendation that yes, there's been IMF intervention and all these things going forward. There would be a bit of a revival in the economy, and based on this, vis-a-vis the performance of the company, the analysis over here, they just can't go wrong. So yeah, thank you.
Okay, that's fine. I've not really gone through GCB's financial statements, but do they also practice loan to deposit like the other banks?
Low to deposit.
Yes.
Loan to deposit or low to deposit?
Loan.
Yeah, I think I mentioned it in. Let me show it to you quickly. Yes, loan to deposits. They actually have a 35% loan to deposit ratio, which is considered appreciable. Yes.
Okay. And do they equally invest in government securities like the other commercial banks? The other banks?
Oh, they do. They do as well. But in as much as they do that, they also engage in like how do you call it? Other investment avenues, not just the government of Ghana. I mean, definitely that is an avenue for them because of the fact that they think it's a safe, or based on the risk analysis and how the economy is going and all that. They think it's also a suitable way to earn money or increase their revenues, which actually has proven true. But the GCB doesn't shy away from doing investment in other areas as well. That's one thing I realized looking at their facts behind the figures. Yeah.
Okay, that's fine. I was actually thinking about, I mean, now that the government capacity to fulfill its obligation is going down and it keeps going down. I'm looking at if they are actually investing more of their resources in government securities, how they are. I mean, if in case, although the probability is very less, but in case it happened that government is unable to fulfill their obligations, I mean, where they are going to be as a business. So if you are saying that they are shying away from doing so much investing in government schools, then I think it's fine.
Yeah.
It's fine. So that's okay for me now.
Okay.
Okay. So thank you, Eben.
Yeah. Thank you.
All right. So GCB year to date volume traded as of July 2022 It's 1,169,426. And the value is 6,000,000.
1 million. Could you take it again?
1169.
The volume 1 million.
1,169,426.
Okay,
That is
thank you.
that's at the end of July. All right.
Okay.
And the
value
is
The value.
6,025,12.69. I've shared it onto the platform as well.
Okay, thank you. I make the corrections.
Yeah. I think that there's not much to say. So okay, you can show.
Okay, I'm done.
Okay, so 1 year change is minus 7.24. 1 year change, I mean 1 year, past 1 year. No, I'm just saying what you have there. No, I'm not saying.
Okay.
I hope it is not. I mean, you pick the figure right.
I sampled a few from previous reports. I mean, recent reports and other things as well. Yeah.
Okay, so 1 year change up to which period? Between which period and which period?
1 year over here would be from if from July, then it means it's the month before July in the previous year.
Okay, so that means the month before July, June.
Yeah.
So June 2021, what was the price versus June 30 this year, the price? That's the formula you used.
Yes. I think I sampled, no, not the price per se. I sampled a few other, data sources or data, platforms.
But I think if you are talking about 1 year change, that should be it, right?
Yeah, ideally it should be pricing, yeah.
So I think you should look at that if you're not sure. I don't have that figure here, so you have to be sure of that.
Okay, sure.
So the same with the other prices, 200 days moving average, and so on.
Okay. The moving day average is there.
Yeah, sure.
Yeah.
Okay. Can you scroll down? Let me see. So the current price is 5 cedis.
Yes.
And the market cap is 1.3 billion.
Yes.
Did you include the enterprise value?
Did I include the enterprise value?
Is it part of the analysis?
No.
Okay. Maybe you can consider adding it that way. It gives a bigger picture of the institution.
Okay.
Enterprise value.
Should I go further?
Can you go down? Okay, no. So the price history. So it's like on a downward trend, right?
Yeah.
Since October. October which year?
The previous 2021.
2021.
Yeah.
Okay. And you're very optimistic it's going to rise.
Yeah.
Okay, you scroll down. Please wait, I'll pause. Can you scroll? No, pause. Down a little. Let me see the table on this page, the first table on this page.
This one?
Yes.
Okay.
They have, that means that they hold a lot of cash or cash equivalent.
Yes, as at this year.
So which item within the cash flow statement that has the biggest? I didn't look up for that.
I didn't add it to this, but it's there. Let me just verify. So
So that we know whether something can be done. So the cash and cash equivalent or the cash flow statement. Okay, so the jumps include the profit for the period. And
so what's included profits?
I'm saying the profits from 227 million to 305 million, 2021, 2022. And profits on sale of property and equipment. There was a marginal jump there too. I'm trying to identify what is the cause for the huge rise. Okay, net decrease or increase in cash and cash equivalents. Okay, there's a huge jump.
Yeah. It's 1.995.
Yeah, 1.9. And the net cash in investment activities from negative to positive. Are you seeing that?
Yeah, I'm seeing that. I said, why am I seeing? Or am I seeing?
No, I'm just asking whether you're seeing that.
Yeah,
so I'm just
from minus 473 to positive 191.
Yeah. When things are happening like this, probably maybe going forward in our next analysis, we have to be looking out for, holding a lot of cash too. So will it be transferred into equity? Will it factor into the balance sheet? That's the next question that we need to be asking ourselves, because holding a lot of cash too can be a bit problematic.
Okay.
You understand?
Yeah.
All right, let's move on. Maybe when I'm going through, can you scroll down? Let's. All right, so this is the revenue and profit trend. This looks quite good. All right, profits on the revenue. There's huge jump in the revenue. So what's accounting for the suppression of the profits?
The suppression of the profits.
No, okay, so what I want to ask is what's accounting for the huge gap between revenue?
Between the profits and the revenue.
What's accounting for it?
The expenditures obviously that they made, but remember that I was talking about this part, the non-performing loans. I mean, they give out some loans it's actually started like during the lockdown, and there were some investments, two main investments that they made. Give me a sec. Okay, so they made two investments in like the hospitality area before COVID, and when the whole COVID thing came in, I mean, it was hospitality and the retail space. But when COVID came in, then the whole border locks and all those things, there were issues with the whole transactions and all that. But at the same time too, they had to, because they had factored that in their whole their plans and their preparations of their budgets and all that, they had to cover that cost. And knowing that they covering that cost, I mean, they did the risk and as analysis and realized that, okay, it would bring them, yield them better returns. And currently, so based on that, they made certain kinds of expenditures that affected them within that period. But the reason why I'm still optimistic about all this is because currently they started paying off or yielding proper results. I don't know if you heard about the fact that the whole accommodation thing that's the GCB is doing currently in partnership with the government and all that. So it looks like all those investments that they made or the money that went into it, yes, it's affected the profit margins and all, but it looks like it is going to yield better. And the reason why I'm still optimistic about the fact that, yes, they would grow is the fact that even though there's a huge OPEX over there, the profits doesn't decrease. It's still growing. Though it's growing at a decreasing rate, but it's still growing. It's not even growing at a decreasing rate. It's just growing at a slow-paced rate, more like an arithmetic progression. So based on that, I'm still confident that yes, it's a good bet for investors.
Okay. Can I see the revenue and the profits table
Sure.
again? Okay, so this doesn't include 2022. Oh yeah,
No,
this for full years. These are for full years.
Yeah, these are full years.
Okay.
It doesn't include 2022. These are full years.
Okay, but do you have same for a half years? Like something like this for a half year?
I could get the data I have. I could derive that from it as well.
Because that's where the focus is. That's where the focus should be.
Okay.
If you can get that one so that we talk about it.
Okay.
Okay. Can you scroll down? Okay, so you can see 2021 revenue.
Yeah.
But can you get the same data for 2022 half year?
Half year.
Half year.
Yeah,
Maybe.
I can.
I'll be very glad. Can you scroll down? Okay, so asset quality. We need same here too. Looks like it mostly concentrated on 2021.
Yes. I mean, with this one, the data I got was for 2021.
For asset quality too.
Yeah, but if I dig deep, I could still get 2022 half year.
Try and get it
Okay.
for us. All right.
Okay.
Okay, so is equity, debt, and cash equivalent.
Yeah.
You can see equity and debt meeting at this point.
It's not necessarily meeting. It's close. Let me see.
It's close.
Close. Yeah, the figures. It's close. It's not the same. Equity is where we are. It's because of the how.
All these are for half year as well.
Yeah, I could do that for half year. Yeah.
Okay, so the same we've done for Q2 2022. No, I think you should just do it half year.
Okay, half year throughout. All right.
HY, so that we instead of the Q2, just do it HY half year. All right.
Okay.
Half year 2019, half year 2020, half year 2021. Okay. But how come the figures, how come they became very close? What happened now?
2021, I think it's all the same. How do you call it? The same expenditure thing I was talking about, the same day covering all that, the debts, including the non-performing loans going up and all that. Because it wasn't, the project wasn't like, I mean, there are two main projects, but it wasn't like they were stationary one-time payment or something. I mean, it's progressive, but it was stagnant at that point in time. It's now that they've started accruing something. So probably by, not probably, by end of year, you'll be seeing that reflective in their cash books and their balance sheets as well.
Okay.
So we'll be seeing equity going up.
So
The difference is, so we'll be seeing equity going up. The difference is a bit substantial, just that it's because of the margins over here. Because, but you don't worry. Don't worry. Yeah. Should I go? Should I scroll down?
A minute, please.
Okay.
When you say the benchmark of 10, what do you mean? Benchmark. Which benchmark are you looking at? Which benchmark? Is it the ideal ratio you're looking at?
Yeah, the benchmark over is ideal ratio. When I did my research, I realized that the ideal ratio over there is the 10. If you're looking at assets to equity ratio. Yeah.
But when you use the word benchmark, does it give a different meaning? I'm asking you.
No, the benchmark doesn't give it a different meaning. The benchmark is like, okay, this is where it is pegged at. This is the ideal thing. If it hits at this point, it's okay.
Okay. All right. I hope nobody will ask a question, who put that benchmark there?
Okay, so let me just make it compared to the ideal.
So ideal ratio of 10. Okay, let's go. Let's go. Let me see this table. So can we say that, so all these figures are for half year, right?
No, if it was half year, these are full years. If a half year, I would have brought the Q2 over there. I did all this because, like, okay, so we're looking at the initial, from the top, I was looking at if this is the income statement or the main performance of the company. Let's look at the previous years, what's like GCB has done in the previous years to buttress what they have done now. That's how come I was looking at the previous years, so 5 years. So how consistent have they been? And how their consistency can reflect in what, like, it had the correlation with what they've done now and how it can reflect to what we will do in the future. That's how come more.
I like what you have done, but I would want you to add that for the half years. So if we get the half years, if we get for just 3 years, so 2022, 2021, 2020, I think it's very okay.
Okay.
All right, finish call. Please go. Please let me be an evaluation.
Okay.
So using the discounted cash flow model.
With the excess return model. I mean, I chanced upon it. So
okay, so maybe let's all be using the, instead of I, let's be using we. Okay.
Oh, okay.
So we peg the fair value of GCB at 7.34. Given its current share price of 5 GCBs, okay, that's the stock is considered significant since it's trading below it. Okay. Okay, so this one, the addition formula. Make the GSC caps, the GSC in front of the five cities.
Oh, okay.
So maybe going for the make all of them caps.
Okay.
Okay, so
That's cool.
yeah, it's cool. So this EPS to dividend yield, are they all half year?
All of them are full years, but this is the current, the second quarter, what we have.
Okay, so the 5-year average that you have.
The 5-year average doesn't incorporate this half year. They are full years.
Okay, so you see it's a bit confusing. So you can remove the Q2 figures from there and just push the 5-year close to the 2021. Then if you can get the figures for Q2, the last 3 years, that will be very helpful.
Okay.
No, you can do that later, don't worry. Just write it down.
Okay.
All right, just write it down. You know that earnings per share is the most important variable of the whole financial analysis. So if you can see it going up year in, year out, then means something good is happening. But let's see the for the half years. All right, let's see for the half years. Can you scroll? Please scroll. This industry analysis. All right, please scroll. Okay, so inflation here. The MPC didn't say the rate, or you stated it down there?
Oh, no, I didn't see the rate.
Can you state the rates?
Okay.
Right.
Okay.
Let me see the first line on this page.
On this page. Okay.
Okay, so Russia, invasion of Ukraine, rising inflation. Okay. All right, scroll, please. You know, you are mentioning some very good stuff there, but there are no figures to them. So I saw depreciation there. See the depreciation, put some figure to it.
Okay.
Net exports, put some figures to it. Economic growth, I don't know what you mean, but let's see something.
Okay, sure. It has to do with GDP in general.
Okay. GCB remains third highest market cap company, 1.3 billion. Okay, that's fine. So there's an inflation trend 1 year, right?
Yeah, and the CPI.
Okay, can you scroll? Scroll. Okay, then we come to the recommendations where we've spoken about. All right, I think we are done.
Yeah.
So make those changes, then let me know. Okay.
Okay, sure. I'll do that yourself.
Amen. Any more comments?
Oh, I think I'm okay. I'm okay with everything.
Okay, all right. Okay, so Albert, I'm very grateful to you.
Okay, thank you very much. So grateful.
Yeah. So we'll talk later.
Okay. All right.
Bye.